Welcome to the podcast. I'm Eric Salzman, joined with Richie Bennett and Kevin Doherty. Let's get right to it. We got a crypto crisis update from Kevin.
Crisis is a good word. There's absolutely nothing positive to say about what's been happening in crypto. It's just down, 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 two steps back, maybe one step forward on some days, but just unrelenting sell pressure, no buying that's visible. And that's the worrisome thing we've talked about before that in theory, that crypto and certainly Bitcoin are undergoing this institutionalization with these new buyers who are steadily building positions. That's hard to square with what we're seeing in the market and with market prices. So it's ugly, and I could say a bunch of platitudes about always darkest before the dawn. And it's just at these moments, Bitcoin now is down, I think 40 something percent from its all-time high. And that's good compared to the other big tokens in the space that are all down 50% plus. So at that point, I think we can no longer talk about a bull market correction. Now we've been in a bear market for 4 months, almost exactly 4 months since the October 10th all-time high in Bitcoin, and it's at this point it's hard to see what might turn that around. I mean, at some point the selling kind of it just stops because Bitcoin's down 40%, but can it go another 20, 30, 40%? Sure. Can it bounce
So,
here? Can do that as well. It's just, yeah.
so a lot of the leverage players just starting to throw the towel in.
Well, there has not been that much leverage in the system, and that's been one of the really head scratching things is that in previous big crashes in crypto, there has been a huge amount of leverage and a huge amount of deleveraging that has definitely fueled the crash. But there has not been that type of leverage, at least leverage that we can measure in the crypto sphere for months.
Hmm.
And so that's not what's driving this. But now we're at a point where MicroStrategy is sitting on losses. So
Hmm.
that's Michael Saylor's company. There's a big Ethereum treasury company that was founded a year ago by Tom Lee, who is quite a well-known guy in traditional finance circles. He's on the CNBC and Bloomberg TV and all the finance media. He's consistently over the years has a reputation as a perma bull, and he started this Ethereum treasury company a year ago. Very bullish. We Ethereum target price $20,000, and it's at 1,500 today. He's sitting on the company he founded is sitting on now almost $8 billion in losses on their mark to market for their
With
Ethereum
with a
position
with a B.
with the B,
Yes.
with the B. And now
Wow.
I'll get this round number right, but over that time period, he's paid himself from that company about 15 million US dollars. So old Tom's doing okay, even though everyone who
Yeah,
participated in his company is bleeding. I mean, the loss in his company is larger than the loss JP Morgan took in 2008, just to put things in perspective. So,
So I was reading a bit about the ETF, the BlackRock ETF is probably also adding to this, right? Because if the ETF's price gets a lot lower, it's going to a discount to the NAV of the holdings. Then you
mhm,
get all these what's called authorized participants come in. They're there to keep the balance between there shouldn't be too much of a discount, too much of a premium. So when there's
right.
too much of a discount, those guys buy the shares, right? And they redeem them. They give them to BlackRock, and then they have to sell Bitcoin, right?
Yeah.
So I think I read that those flows are starting to really hit.
also,
Um, it,
I
yeah,
think
go ahead, Rich.
Warsh, Warsh's appointment on Friday or his nomination set off a lot of things, right? Like gold, silver, all metals, all crypto, all, in a big way. And
Hmm.
the theory there is he's going to be anti-liquidity, right? He's the guy who's maybe in the short term will lower rates to make the boss happy. But a lot of people think he's like his own man. And after a few, you know, months in office, he might just be like, nah, we got to keep inflation out of here. And he's a big anti quantitative easing guy, right? So
Yeah.
he like left the Fed because of that, I think. Right.
Now, what people don't immediately go to with that, Richie, great point, is that what he's good, the opposite of quantitative easing is quantitative tightening. And essentially, the Fed's probably never ever going to sell from their now $6 trillion balance sheet, which is mortgages and treasuries, but they're going to, every dollar of prepayments on the mortgage-backed securities that comes in does not get reinvested. It's like you take the money, you throw it in the trash or the incinerator. Every treasury that matures, that's it. They don't go buy another one. So that's how you run down the balance sheet. The problem is when you do quantitative tightening and you just let it go, what happens is the funding, right? And Kevin, you've talked a lot about this. The funding markets seize up. All of a sudden, because when the Fed is doing quantitative tightening, bank reserves start falling at the Fed. And what that does is all of a sudden, all that money that was there to fund treasuries and basically very liquid assets, but it's the funding markets that you all of a sudden you'll see the funding rates like SOFR all of a sudden skyrocket. And that's what happened in September 2019 when they were doing quantitative tightening back then. The reason I'm bringing this up, and we kind of had a mini event in November with similar thing where it didn't spike as high as it did September 2019, but it did spike. And the Fed actually created like a quantitative easing light where they stopped the tightening and they're buying treasuries again, but they're buying just bills. They're not buying, 5-year or 10-year or 30-year bonds. And the only reason I bring this up is if he's going to try to go on a longer period of quantitative tightening to reduce the balance sheet more than those at the Fed wanted to in the past, that could push short-term rates up as well, and that takes away something that we've all been talking about that's so important is liquidity. That'll drain liquidity out of the system, and that's not good for risk assets either.
Which begs the question, why did Trump make this appointment? If
Right.
the conventional wisdom, which I see no reason to doubt it, is that he wants to juice the markets and juice the economy going into the midterm election. And this seems to have done the opposite of that, at least
Hmm.
initially. I mean, I don't have a view on this. I'm scratching my head and wondering.
I got a good one. So he is married. Kevin Warsh is married to Jill Louder, I think. Jill. Her grandma was Estee Lauder. Her dad or her uncle was Ron Lauder. Ron Lauder, huge, just passed away. Huge, huge donator to the GOP over time and BFF for like 50 years with Donald J. Trump. 50 years.
He was a mentor, right? Wasn't he like a mentor to Trump?
Completely. Him and Icon.
Hmm.
And so there's that, right? People are like, okay. But again, even with Elon, right? At the end of the day, there's always going to be a fight with the big man, right? If the big man doesn't get his way, and you got guys who are powerful enough to tell him, sit down, big man, and listen, he gets mad, right? So I predict there's going to be a fight. It may not be right away. It won't be before the midterms. I think they made that deal in the desert. But
Mhm.
like all bets could be off, like if Warsh is sitting there saying, wait, you guys said 2% was the inflation target. Why is everybody dancing around like it's so great that it's 2.9? Like, that hurts Main Street. Like that, we're going to go to 2%. And God help us all the day that happens, right? Like, then people will be like running for the hills. But, he's smart enough not to wreck things or try not to wreck things, but he may not have a choice.
I read over the weekend that he actually has very good interpersonal skills. Like, all I read about him initially was, oh, he's a big critic of the Fed and this and he was very outspoken about it. But apparently he gets respect both sides of the aisle. He can talk to people, he can form consensus. I think the key is Besant.
I
As
was just
long as Besant is there,
I was just going to say
right,
Besson probably told Big Don, "No, this is the guy because he's a good guy." Because I worked with him, right?
right.
It lacked a little bit because they
Mhm,
both worked for Stan Druckenmiller, who was a Soros disciple,
mhm.
and I think Druckenmiller also told Besson, this is your guy. Like somehow talk to the big man and get that.
Yeah.
He's
So
smart.
what do you think though about crypto? So we have the Trump family's World Liberty Financial. Now, granted, if I'm wrong, tell me, but they already got a lot of their money out, right? Didn't they get paid a lot when they
Yes.
issued yeah? So they've
Yes.
already they've already pocketed the what about a quarter of three-quarters of $1 billion or something so far?
Yeah. Yeah.
Something
They
because they paid they for the company. The investment was 500 million for 49% of
That's
world.
Abu Dhabi.
yeah.
That's the big story that dropped over the weekend that everybody looked at and said, "Oh boy, look at that!" And then no one's talking about it again.
Somebody did today.
And
Mhm.
Somebody did.
I
There was a Democratic senator who's asking questions. It's going to
I
be
imagine I know somebody to ask, um, I, but the intelligence community has to be going bonkers about this, right? I mean, it's a clear between the first leg of it was to get Abu Dhabi to use the 2 billion of Trump's stable coin to buy Binance, and then CZ got his pardon. And now you realize that behind the scenes, Abu Dhabi, like that's a sovereign wealth fund, bought $500 million, 49% of World Liberty Financial, and they're getting the chips, the most advanced AI chips that are out there. And the thought is that, if Abu Dhabi puts them on the cloud, if it becomes cloud-based, we lose complete control over it, and it could end up with the Chinese, and then the Chinese can use these super advanced chips to train things for military purposes, things like that. So in effect, it's like a giveaway where the family gets $500 million for World Liberty Financial. Abu Dhabi gets the chips, and that could mean that China gets the chips. And then I, I don't know if we've ever seen something like this before. Where it totally goes against the interests of the United States, but it goes to the interests of the Trump family.
And this is a big reason why uh, crypto is taking a hit because of the delay in the Clarity Act being passed by the U.S. Senate. And this has become one of the really, there's two core things that the Democrat opposition to this act is based around. One is the paying interest on stable coins, and the banks don't want that. But the
Mhm.
other is they see all this money that the Trump family has made, and they don't like it, and they're pissed about it, and they see that this is gaining political traction for them. So remember back in the summer, the Clarity Act passed Congress with quite a lot of Democrat support because at that time, crypto, remember during the election, they threw their weight and their money behind Trump. And many people think that it was a key reason why Trump won is because all these crypto single issue voters backed him. And so the Democrats, really backed off quickly and said, we cannot be seen as the anti crypto party.
Mhm.
And that fed or that led through into the summer when congressional Democrats supported the Clarity Act. Not anymore. Now the Senate, it's more time has passed.
Mhm.
The all of this stuff, including this latest about Abu Dhabi, has come out, and suddenly I think the Democrats or some of the opponents to crypto in general feel like, you know what, we don't. need to go along with this necessarily anymore. So it's gotten a lot trickier for this crypto regulation to get passed.
Hmm. Okay. Let's move on to something good.
The Super
So,
Bowl?
so when I think this was our podcast that we did right before New Year's, and Mr. Bennett came out and talked about how there's a great rotation trade that is coming, and all these boring old stocks that ConAgra and Lowe's and BJ's and Colgate and you name it, these boring companies that all they do is just make money. Like those are going to be, it's time to kind of rotate out of this whole AI bubble or surge. And it's time, these guys all were behind, were way behind as underperformers because the Mag 7 did so well. And lo and behold, that has been the trade since really the beginning of the year. Today, everything's getting smoked, but a lot of the trades and stuff that we talked about, and Richie talked about ConAgra, Choice Hotels, stuff that I took his advice and I basically, not a lot, but some here, some there, some there. And all of a sudden I'm looking down, I got like a 15 stock portfolio. And it's all those guys, and those guys are doing great. I mean, today's a bad day for the market in general, but those guys are doing great. So, Richie, I wanted to have you take a victory lap or two and tell us what else we should be doing.
Yeah, well, I've been on the wrong end of the stick because I'm always a value guy. So, all the Mag 7 and stuff, I mean, a long time ago, I want to say 6 years, 7 years, Apple, for some reason, got hit bad and they traded down to like a 12 PE, Apple. And I was like, nah, this is like, and I made money on that. Like I got out of it once it, because now it's higher. Well, it's fallen, but the last couple of weeks it's going up a lot. But their PE is now kind of astronomical for me, not for many, but for me. So I usually stay within the bounds of like the old boring companies that just have, like you said, Eric, just happen to make money all the time, like all the time.
Right.
And I can remember a couple of quotes from the old man from Omaha, right? Gillette was like its own company. I think P&G bought it, but the shaving company Gillette. And he said, it gives me great pride owning a stock where I'm asleep and half the world is using my product. Like half the world is shaving. Okay. So stuff like that is always a common theme for me. I just wrote down some of these numbers though. So just to go to the point of it's not all bad, right? It sounds bad in some sectors, real bad. But so Kevin was talking about the top of crypto as of like a few minutes ago. I did some quick calculations. Year to date, Bitcoin is down about 24% year to date. So January 1. Ethereum is down 35%. Yeah, this is live pricing today too, counting the shit show that's going on now. And you have the NASDAQ now down 2.5% on the year as of today, right? 2.5. It was up a lot. And the good side, the S&P just went negative for the year by a tiny bit today. The Dow is still up 1.5%. And the real sneaky one is the Russell 2000. Those are small cap. That's up still this year, 4%. So it's been a month and a little bit. If you can get monthly returns like that, you are richer than rich, right? That's a good thing. And what that's telling you is like the Russell, the small caps, they thrive on U.S. growth, meaning, they don't get a lot of their profits from overseas like these big corporations. So they need to have the U.S. economy humming, which some would say it's not really humming, right? Like it doesn't look like it's humming. But what can get it humming is lower interest rates. So if people are pricing in, and usually, right, the old sages used to say, like, the stock market is telling you what's going to be happening in 6 to 9 months. So it's already pricing in whatever. So that tells me with this Russell, they're definitely banking on at least one or two by then interest rate cuts, right? And that would time nicely into the midterm elections, right? So I think there's going to be one in June and I guess in September if they
Yeah.
meet.
Yeah, March is like only about, well, I'm going to say before today, I haven't looked, but March, the Fed fund futures and OIS swaps it was about a 12 to 15% chance of a cut. So probably not much. Now today it could have gone up, especially because today we had the Fed had puts out a survey or a study every month called the JOLT, which is the job opening. I forget the acronym, but essentially it talks about the level of job openings, the level of layoffs, the quit rate, which back when you couldn't get workers, the quit rate was sky high, right? Because people like, I can get a better job, so they'd quit that job and go to another job. Well, the quit rate has fallen a lot. The layoff rate has gone up a lot. So today, one of the reasons the market is getting hammered is because people are now anticipating, and they're probably like, hey, the Fed made another mistake. Like we didn't, like they should have maybe gone in January because these employment numbers are looking worse and worse. But we have an employment number on Friday. So, we'll see what happens. And, just back quickly to Kevin Warsh is that he has been a critic for a long time. And I mean, I agree with a lot of what the man says, and a friend of the podcast. And what he says is he's been highly critical of the data, the way that the Fed does it, the way the BLS does it, like basically saying we're looking at garbage. And the Fed,
Sorry to interrupt. It's been that, the argument on that side is it's old data, right? You're not telling me anything new. So, like, why do we use this to drive everything unless we think the trend is our friend and it's going to keep getting worse? So that's it's guesswork, right? It's just like, okay, I think it'll go down again.
and in this day and age, with the technology that you have, I mean, you'd think that you'd be able to predict, do better, or at least start focusing more on looking into the future, right? I mean, you've got these great algorithmic hedge funds, right? Like you got Renaissance Technologies, the Medallion Fund, you got AQR. Like these guys have models that predict stuff, right? Maybe not Renaissance, but certainly a lot of these. Like you're telling me, there's not some sort of really cool algorithmic function now with everything we've got and the speed and the AI that we can't do a better job saying what's going to happen in 6 months. And I know you can't. I mean, what I'm saying? It's like they should be more about prediction and less of, like you're saying, Richie, than looking back in the past. It's meaningless.
Yeah. And another thing, like think about like back in the 80s, some of these rudimentary that look rudimentary now, tactics, these hedge funds that are now filled with technology, they would literally hire kids to like take a clipboard and go to like the Costco or the BJ's or whatever and just count the number of cars. Like honestly, like, and they'd be like, okay, that's not good for the economy if they got a half full parking lot, right? So
Mhm.
today they can fly a drone like in 30 seconds and know exactly what's going on, right? Like in all,
Right.
which points me to another thing on the good news side. So there's a lot of buffering going on here. Bad news, good news. The transportation index shows huge. It's up 12% year to date.
Mm.
This is like the FedExes, the UPS, even Amazon, I guess, is probably in there, right? Because they drive everything. So those companies are doing great, and that used to always be a good sign for the economy when that index is flying. Like there's a thing called the Dow theory forecast, and when there's a bullish trend in the Dow Jones and a bullish trend in the transportation as well, it's good times. Like that's bullish, and just based on so far year to date, that's going on. But
Mhm.
I follow this one guy. His company doesn't sponsor us yet, so I won't get his name and give him
He's
free.
not a friend of the podcast yet.
Try. He's very good. He did make a comment, and he catches the trends. He's bearish, and normally he's bullish, right? So he's bearish right now. A lot of factors, obviously, but he said the last four drawdowns. I guess Kevin, you would know how many years this goes back. Probably like 10, 15. The last four drawdowns in crypto have foreshadowed bad stuff in the equity markets. Like maybe not forever, and maybe sometimes it's a fake move or whatever, but it shows me that still crypto hasn't escaped the risk on category. So, it's getting there. I think it's getting there, but it's usually and he said it's a precursor. It's like the Bitcoin's going down, the Ethereum's going down. Watch, stocks are going to be next.
Yeah, and the theory behind that is that it's the most sensitive to liquidity, the most liquidity sensitive asset.
So it makes a little sense for all these things.
So one thing, we were talking about the great rotation trade. So last week, Microsoft and Meta both came out with their earnings, I believe, on the same day. And Microsoft tanked over 10%, and Meta, I think, went up 10%. And now and the main focus of both the earnings, and now this seems like the main focus of everything is AI. And with Microsoft, all of a sudden, things that I think would have made the stock jump 10%, that they talked about the capex that they're going to continue to do in probably more than the market expected with regards to AI infrastructure. And I know that the cloud, I think that didn't the Azure kind of not come in as good as everyone expected?
Yeah, it's a little bit down.
But still, it's like, everyone's even Alphabet, I think they're looking at them saying, and Google, that's like, I think they're the premium class, right? Because like we've talked about before, right? Is that they've got the chips, they've got the data set, they've got everything together that can make money with AI in a number of different ways. And they're not doing well. And then Meta, because Meta was able to show our AI tools increased ad revenue a lot, and that's what made them go up. But it just shows that all of a sudden things that would have made the stock like the Microsoft like skyrocket, now it's a negative. And what's happened this week is we've been seeing is that the software companies are getting obliterated now. Like Salesforce is getting annihilated. Everything because what is it? Anthropic Claude came out with their next level that basically says, well, don't worry about writing the software. We'll write the software. So it's pretty wild. I mean, all of a sudden, it's like the trade has stopped in its tracks, turned around, and just is completely going the other way like a freight train.
Yeah, and I think the bottom line too is now if these indices that people pile their 401ks into, and all that jazz, if those things start faltering because if this Mag 7 controls like 35% or 40% of the S&P, and now all of a sudden the stock pickers, the funds that are actively managed, guys sit around and go, yeah, let's buy that, sell that. We're not buying the SPY. That's for somebody else. If that really flips, then you have some issues because now people, JS the ragman, he just looks at his monthly statement and says, oh, good, I went up. And then all of a sudden, if that starts to turn, and then they hear scuttlebutt that Joe down the block, I don't buy those indices anymore. Like I got a guy who picks them for me. He's doing good, and that can be tricky. I don't think people hit the button all the time, but they might.
Sure.
That underperforms and that word gets out. Like, hey, and last year even with the, it was a good performance for the S&P and the NASDAQ. But like more stock pickers than not beat those markets, those indices. So that's another trend that, you got to keep watching.
Right. Okay. Well, Kevin, let's talk about something good. The Seattle Seahawks this week are playing the New England Patriots in the Super Bowl. Kevin is a big Seattle Seahawk fan. And so we're rooting for the Seahawks. I don't know if that's how Richie's betting, but that's what we're rooting for the Seahawks. And Richie, how about giving us a Super Bowl preview?
Yeah, I'm going to give you 2 picks. I thought immediately after those 2 games 2 weeks ago, the championship games, I was like, Seattle is going to run this game over. Like they're just going to crush it. Now the conspiracy theory hack goes on. If people have watched the news lately in the sports world. Not one, but two New England Patriot dynasty guys were voted not into the Hall of Fame on their first ballot, which prompted Roger Goodell, chairman of the commissioner of the NFL, to say he gave out like Belichick's stats and just said, that's a Hall of Fame person, right? He didn't knock publicly the committee. Then I figured they were just punishing Belichick. That came out first, and then they didn't let Kraft in, the owner. And I'm like, well, what did he do? Like, did he tell them to deflate gate or steal people's signs at covert practices? I don't know, but like it seems like a big diss, right? So now I'm a little concerned. Obviously, but what's also interesting is 16 of the 53 guys on the Pats roster were either traded for or drafted by Belichick still. So he, not the quarterback, because he came after Belichick left, but he's got his imprint. It's the same thing, right? The guys who were like hungry, 6th round, 7th round, maybe not picked, right? And they're hungry and they're good and they play hard. And so, but at the end of the day, I'll be wearing my Jets shirt because the quarterback of the Seahawks was a Jets reject. The Leonard Williams, the star of the defensive line, which is number one defense in the league, was also a Jet reject. They were teammates at the Jets at one point.
Didn't the Giants reject him first before the Jets rejected him?
And then one of the guys, one of those, I think, 7th round guys that I didn't know on the Pats was the guy who blocked the field goal last week. He was a Jet. Like all three of those guys were not good enough for the Jets, but they're good enough for the Super Bowl. I think this is where it comes down to the brass tacks. I'm going to go with Seattle minus the 4.5. Right? That's the point spread. And I think deep down, both of these coaches are very defensive minded. Like Vrabel played defense. This guy McDonald, who coaches the Seahawks, defensive coach. I think deep down, they're scared of their quarterbacks. Deep down, like they'll say whatever in the press, but I think they're scared. And they know, like, let's not let this guy screw up the nice trophy, right? So that leads to, we both have good defenses. We both have decent running games. I think the total now is like 45.5, 46.5, the total points scored. I'm going to go Seattle and under. So maybe
what's the under, Richie? What's the under?
I think it's 45.5 last I looked, maybe 46. But I could see like a 23-13 Seahawk win. That's where I'm going.
I agree with all that. And I think you raised the point about the momentum thing, that the Patriots are going to be angry. And, who knows what the players, if they care about that stuff. But maybe a way to play that a little bit is to take the Patriots' first half line. Because if they come out there and you see right away that they're just, hitting harder, they're a little bit faster because they're angry, that adrenaline would, could potentially give them a boost in the first half. And then you might expect the Seahawks better quality. And I say better quality just based on the way both teams have been playing over the last couple months. Seattle has just been lights out. If that continues, any given Sunday and all that crap. But you got to figure, Seattle, just from a pure how they've been playing recently, it makes sense that they're favored in this game. But maybe take the Patriots in the first half line. I don't know.
It's a good point because the Pats were tied with Denver at the half last game, right? But they have had the lead, which I find amazing. But it's a good point you make, Kevin. They have had the lead, I think, in 15 games this year at halftime, 15 or 16. Like by far the biggest record in the NFL history. Like they just come out of the gate and they're winning it. And, they haven't lost a lot. But when they lose, it's the second half.
Okay. Well,
should be a great game.
Yeah.
Don't walk, but run. Run to your
Well,
to
Run to your bookie.
support your local bookie.
Yeah, take all your worthless Bitcoin, put it on Polymarket, and put it on Big Dick
Seahawks
Picks.
-4.5. All
Exactly.
right. Okay, guys. Good stuff.
All
great.
right.